All right, we are back, and on this video, we're gonna go over patterns. We're going to be talking about just different patterns that you will notice in the market, that you will see, that can kind of help you pick out a good trade from a bad trade. So I really like there's some good patterns. You know, we could go really deep into this or not too much, but I don't base all of my trading off of patterns, so we're just gonna skim through it and go through some patterns. One of the most well-known patterns is a double top. It's also a double bottom. So with that, you're gonna have, you know, of course, price possibly moving up, hitting a support, coming down, coming back up. This is your critical point where you need to make the decision to buy or sell. If it breaks this, then you know you could see it buy up. That's why you have a tight stop loss if you decide to sell. Very, very common pattern. You're usually going to see them on higher time frames. Most of these patterns are coming with a major, oh, I wrote a B for an M. Major reversal. When you see a lot of these patterns, that means there is a major reversal happening in the market. They even have triple. I don't see them too much anymore, but I don't also really pay attention for them. And that is pretty much the same thing as this, just possibly another one up. And at this point, you need to make that decision to buy or sell. And then we have head and shoulders. Head and shoulders pattern. There is trending head and shoulders and a regular head and shoulders. Your regular head and shoulders will look a little something like this. You got your left shoulder, right shoulder, head. These are really good patterns to recognize and notice. When you see this event happening, you are looking for this right here. You want to sell here on the right shoulder. They also have them in inverse. You're looking to buy here. I mean, in all honesty, like, you'll notice them in the charts, but they're nothing crazy. They do happen, but it's typically, like I said, a major point of reversal. Let's say you've been in a massive uptrend for a while. There's going to be some type of large pattern to find, to see, to then get some type of major reversal. On a sell here, you'd want to sell here, stop loss there, take profit would be down there. Typically what would happen. Or you could, you know, like I said, a lot of times major reversal, so you could see it come back up and you could add to your position here. So that means it might continue to keep heading down. And that's with if it's at the top, but you do sometimes see trending head and shoulder patterns. And then there's harmonic patterns. I don't really use them, so I'm not going to teach you guys them just because I know them doesn't mean I need to teach them. And then the other pattern that I have been trading with recently, should I talk about divergence here? Because divergence is a pattern. All right. I'll talk about two more different patterns. One of them, I don't really know what it's called. But I kind of just started seeing it in the market, and it's kind of been what I have been using based on my US 30 trades. So let's say, and this is, I mean, there's a lot of people, I don't know if I can even say it, there's a lot of people that have it, they call them order blocks, but I can't really, I mean, copyright issues, that might be illegal to say, I don't know if it is or isn't. But let's say you have a chart here, and this is something that I've been doing, and I've just kind of been having fun with it, and it's been working for me pretty well. But let's say we have some momentum to the upside, and then we get, you know, some nice candles coming down. You know, you have that, and then you get some nice candles coming down. So this is obviously a high, right? So let's say you have one large candle coming down, and then you have a candle that is no greater than half the body of the other one, of the previous candle, and then you have another large candle, double the size at least. What I am looking for in a trade like this, now these are always by big reversals, and I will show you on the chart and all that. But what you're looking for is some type of reversal to this point. Stop loss here. Let's say the market continues to go down here, and then it retraces back up. Boom, hits this. You're looking for that sell to then go down. And so it goes like that. TP. So your stop loss and take profit. The reason I love these trades is because it's usually next to a major reversal. So when you are having a trade like this, your stop loss goes just above the high. So let's say it does create a double top. Well, then you're still in the trade. But number two, since it's next to a major reversal, your stop loss might be, 15 to 25 pips, but your take profit might be 55 to 65 pips. And that is, from everyone else is calling them order blocks. I don't know, I think there's one guy that copyrighted that or some shit, but I really don't care. But it's just something I've been noticing in the markets is just this huge, like when you have, like, let's say a massive upswing, and then you have a turnaround, and then you have one large, very large candle that shoots down, and then a candle that shoots up, backwards, back up, that's not larger than half of the body of the first candle, and then another massive candle. So let's say your first candle is 10 pips. Let's say it's 10 pips. You want 5 pips. I'm just gonna write P. 10 pips, 5 pips, and then you want this candle to be about 20 pips. Does that make sense? You're wanting a larger push down, a push up that's about half of the original candle, and then the next one to be about double.
And that would be your entry?
And then not close once it continues to go down, and then it retraces back up.
And test again, and then...
And test again. That is a retracement zone that I'm looking for.
Now, would you wait for that candle to close?
Nope. As soon as it hits this price. As soon as it hits price right there. Whatever that price is.
How do you know that it's not going to go up?
Well, you don't know. Welcome to Forex.
It's all about calculating your odds.
Yeah, it's risk odds.
And that's what the pattern, that's the majority of the time too, right?
Yeah, pattern is risk odds. The thing about these trades that are great is, let's say you lose 20 pips at a time and you win 60 pips at a time. Well, you can lose 3 trades and win 1 and break even. Yeah. So let's say you are a 50% trader on these. Well, you're still incredibly profitable. You can win 5 out of 10 and be incredibly profitable. So it's all risk odds. That is the one thing that
And that
you
can
know.
happen to like.
This can happen on any pair. This is actually how I trade US 30. This is like literally on the, and I trade this on the 15-minute to 1 hour. This is one of the ways that I trade US 30. Oh, he wanted to get this now that I said US 30. He's ready.
Yeah, now.
This is one of the biggest things that this is how I flip accounts with US 30. Order blocks, if I'm allowed to say
Will
that.
it automatically get in the trade for you?
No, why would it? You have to find the trade.
An order block, like if you
No.
set a block.
Oh, well, if you set an order, if you set a pre-existing, like if you see this and you set a buy limit or a sell limit there, absolutely. But an order block, like that is a candle pattern, a candle sequence that you have to find. Make sense?
Yep.
Any questions on this one? I'll show a few examples too. I'll show them. All right, and then, so I'll talk about divergence, I guess, next. And how I trade divergence. All right, we're gonna go over two different types of divergence here. All right. Divergence. This is the star of the show. It really is. Divergence, if you can understand divergence, you can become a good trader. This is how you're going to learn the difference in a real double top and not a bad double top. So the way I trade divergence, two ways. Let's say we have a uptrending market. The market comes like that, and then market is currently here. You're going to notice your divergence is going to be on your TDI, which is down here. So let's say, and you'll notice that your TDI will kind of follow what your market does. So let's say that this is what I call hidden divergence. I learned it, learned it from Derek. He explains it into more detail than I do. You can probably, I think his YouTube is Trader Society. We'll put it down here somewhere you could go if you want to learn like really, really in-depth detail. His YouTube, it'll be down there. He does kind of the same thing I do too. So it's a really, really good person to follow, watch, and learn from. But so we're looking at the TDI down here, and we are seeing that there is a big discrepancy here. I guess that's the right word. Is that the right word? Different? We'll find out. We might have to Google that one. But there's a big difference here. So the big difference is, in this instant, is that the market, this is the actual price right here. This is the actual price. So, and TDI just is based off the RSI, which is Relative Strength Index. It's just kind of showing the strength of the market, if that makes sense. So if you can tell here, we have a price point here, and price point here, and here. But as you can tell, all our price points match up until we got to this zone, which means the price dramatically, the price strength dramatically shot down. So now all of a sudden, we are looking like that. When on the price, we're looking like that.
It's a no-go.
Well, no, that's what you want. That's a good thing. That means that, because imagine if it was just here, if it stayed up here and didn't go down more, that means that the buying power wouldn't be as strong. Since it's shot down further, that means that the buying power is really, really strong, which means it needs to buy back up. So one of the main trades I look for is this right here. When you have price point and an uptrend, but you have on your TDI forming a downtrend, almost a downtrend like that, well, then you have a very, very good potential for the TDI to catch up, and price will allow the TDI to catch up.
And it's always measured from the bottom points, not
Or top points.
Or tops.
Well, it depends. It depends on what you're doing. So this instance, it's measured from the bottoms because you're buying. And it will be measured from the tops if you're selling. So let's write that down. So tops for selling, bottoms. Your entry, well, see, here's the thing. Your entry is going to be based off of what the price is doing. You're going to base your entry off of that. But you're going to use this as a tool.
To know if you need to buy or sell.
No. This is where you're gonna determine if you're buying or selling up here. You're gonna determine where your entry is up here. This is just an almost like a, okay, you're 80% sure here. Well, we add this in there. Oh, now you're 100% sure. It is the strongest indication that you will find in the market. Remember how I have 5 things that need to be checked off? Well, imagine this one. All of the other ones, okay, you need 20, it says 20% each one. 20, 40, 60, 80, 100%. Well, you throw divergence in there, all of a sudden now you can be, let's say all of them check off, now you can be 150%, 140%. Because when you have this, that's a good sign.
So the market's trending up, the actual price, but the TDI is kind of downtrending. That's a good indicator.
Because typically if you look at your TDI and you're like you look at it, so you have a chart here and then you have TDI down here. Well, if your chart is doing this, your TDI is typically gonna do that. But let's say for some reason on this one it shot all the way down to here. Do you see where I mean by that? This has to catch up to this. So they're supposed to be aligned. But when they're out of alignment, what does that mean?
Something's happening.
Something has to align again. Exactly. And this is hidden divergence. This is another one. If you only took this trade, if you took nothing but this trade on the H4 time frame, you could take 4 trades a month, 1 trade a week, and be incredibly profitable. That's all you would need. All you would need to be incredibly profitable. So that is how I use majority of my divergence. There is other ways of using divergence, and you can find them. But I'm gonna go ahead and say, like I said earlier, go down and follow Derek. He will teach you more in depth. This is just the way that I trade, and that's what I'm teaching here. Is nothing, not teaching the, every ins and outs. I'm just teaching you how I trade, showing them how I trade, and that's where I'm gonna go with this. So have some fun with it. But yeah, so this is basically the only type of divergence that I use. I use other ones because I know them, but I'm not too focused on
How often
those.
does that happen?
Depends on the time frame, but I see it happening. I see it happen every week.
And is it always only 2 points? Is never 3?
No, you only want 2 points. Only 2 points. And you also will typically notice that this will be off of a 50 moving average.
Okay.
When that occurs, this will be bouncing off a 50 moving average. Typically. Yeah, if you can learn this one trade setup, you'll be good.
What do you mean by the 2 points? Go into that.
So you wouldn't, basically on the TDI, let's say this wasn't there. Let's say it went to here, and then it went up to to here, and then went down like that, you wouldn't measure. So you're looking for this point. You wouldn't measure this point in movement and to this point in movement, this point in movement to this point in movement, because there's a middle one. See what I'm saying?
Yep.
You're looking, so like what I trade, like I always tell people, I'm not looking for that perfect entry. I'm not looking for that, you know, perfect grand slam trade. There's always going to be another trade. There's always going to be something else happening in the market at any given time. You treat a trade just as a trade. That's all it is. It's a trade. So don't try and force nothing. So basically, you only want the 2 previous ones. You know, you don't need to try and look for anything further. Eventually, it'll line up more and more. Don't try and force it, though. Any other questions? Got it? And we'll, like I said, we're going to have videos where I'm showing this on charts so you can all can see it. So that is my patterns. That is my take on patterns. That is something that I look for in the market every day. So stay tuned, and we'll be getting more videos out.